Welcome back to my channel. I enjoyed recording and editing my first video, and I thought I would try a little change with the presentation. So here we go. Again, my name is Vaughn, and I have prepared federal and many state tax returns for many individuals since 1975. You can do the math. To me, preparing taxes is a ministry. I love to help others and help them gather their information regarding their income and all of their deductions they need to take, and so that they can properly file their taxes and hopefully get a refund. But before we get any further, um, I'd like to explain to you what the different tax filing statuses are. Everyone's filing status is different. You may think everybody's a married filing jointly or everybody's a single. They're not. There's a lot of little idiosyncrasies in between. So there are standards to filing a personal tax return, but there are a few exceptions, and I'll discuss that towards the end. When you meet with your tax professional, this coming season, you will be better, you'll have a better understanding on what these different statuses mean and which one is best for your situation. For all 1040 federal tax returns, understanding what your filing status is critical to how your taxable income would be taxed. There are three official filing statuses: single, married filing jointly, and head of household. Each of these categories has a specific determination. Your filing status is determined on the last day of the tax year, which is December 31st for most taxpayers. For those of you that are single, this sometimes is the simplest filing status. If you are 16 through 95 plus, you have a W-2, interest, dividends, capital gains, some of your Social Security may be taxed, are all added as income. If you are single and over 65 in 2025, there is an additional deduction of $2,000, and with the new tax bill, there is another $6,000 for tax years 25, 26, 27, and 28. But if your total income is under $15,750, and there is zero federal or state withholding, you do not have to file. The only suggestion I would make on this is that even though you don't have a federal or state withholding, I would still file because it goes toward your Social Security and Medicare when you do retire. Um, and that again can change in the future. The next is married filing jointly. This is the best filing status for the best tax savings. If you are single until 11:59 p.m. on December 31st and you get married, you are considered married for the whole year, according to the IRS. If you are married and your spouse passes away during the year and you do not remarry that year, your filing status is still married filing jointly. The following year, if you get married, then you would be married filing jointly to the new person, or if you do not get married, you would file single, or if there is a child at home, you would have to file head of household, but that first year you would be filing as a widower, and I'll get to that towards the end. Starting in 2025, if you both turn 65, there is an additional $4,000 and a $12,000 deduction to your taxable income. The $12,000 is $6,000 per each individual that is 65 or older, and this will only last for the next 4 years. So be mindful of this and be prepared for the future. The next is head of household. This filing status can be the most complicated. If you are single and you have a dependent child living with you or children, you qualify as head of household. The head of households now qualify for additional credits, such as earned income credit and child tax credit. If you are married filing jointly, you may also qualify for earned income credit. But again, this credit is all based on taxable income. And in regards to child tax credit, this will also be a part of your dependent status. These may or may not be refundable credits, but in many cases, it does generate a better refund. Now, what I was talking about earlier, these are certain circumstances that you may need to file under a more specialized status. Married couples that separate during the year and may not want to file together. There are some underlying situations. If they've been together for the last 6 months, if there are children involved. But if you have to file separately, that is the highest tax bracket out there, and it just costs you more by not agreeing to file together for this last year. Children that are inside of divorce decree or separation, again, talk with your tax person if you are planning on getting a divorce or a separation, because this can be detrimental to how you file your tax return and how it is written in the divorce decree for future tax preparers that have to work with you in regards to who gets to claim the children. The other one is the qualifying widower, is when your spouse dies during the year and you have dependent children still living at home. And you do get this extra credit for one additional year after the passing of your spouse. So this is always something to be sure to talk to your tax person about. It does get personal, but this is the only way that we know how to give you the best tax return that's out there. And in closing, I just want you to be mindful of your filing status when you meet with your tax preparer. If they do not ask you questions, your return may be rejected, and it could cause a delay or reduce or increase any refund that you may qualify for. That's it. Thanks for watching. If you have any questions, please comment below. Like and share this video. I will have more tax tips in the future. God bless you. Have a great day. Bye for now, and see you on the next video. Bye.